Hello friends, once again welcome to the annual refresher program in teaching commerce titled Financial Markets and Emerging Business Models offered by the UGC-HRDC University of Kerala. In continuation to the previous two units, the unit number 3 discusses the different fintech innovations, emerging business models and the financial market disruptions. I am Dr. Santosh Kumar, Professor of Finance, School of Management Studies, Cochin University of Science and Technology, Kerala. The current module 3.1 intends to discuss the technologies of fourth industrial revolution, the supply side and demand side drivers of fintech innovations, the aims behind the fintech innovations, how the traditional financial institutions are struggling for survival, the growing influence of fintech, what are the sources of fintech disruptions, emerging fintech business models, the business risk of traditional financial institutions, survival strategies for traditional financial institutions, and the future of fintech. Moreover, one of the most popular fintech innovations, mobile payment services, will also be looked into in this module. Before coming into the above discussions, let me give the backdrop on which such a discussion must progress. As all of you are aware, the world stands in the midst of a technological revolution that is fundamentally altering the way everyone lives, works, and relates to each other. It will be possible to observe the complete disruption of many industries and their business models in the coming future. The third industrial revolution, which we usually call the digital revolution, was relating to the development of computers and information technology since the middle of the 20th century. The fourth industrial revolution is considered as a new era rather than a continuation of the third one. In its scale, scope, and complexity, the transformation will be unlike anything the mankind or business has ever experienced before. The explosiveness of its development, the disruptiveness of its technologies are brilliant. The disruptive technologies and the trends of the fourth industrial revolution, such as Internet of Things, robotics, virtual reality, blockchain, and artificial intelligence, are changing the way we live and work. What are the drivers of this revolution? On the supply side, many industries are witnessing the introduction of new technologies that create entirely new ways of serving the existing needs. This is significantly disrupting the existing industry value chain by improving the quality, speed, or price at which value is delivered. On the demand side, growing transparency, consumer engagement, and new patterns of consumer behavior, which is increasingly built upon access to mobile networks and data, force companies to innovate the way they design, market, and deliver products and services. A key trend is the development of technology-enabled platforms that combine both the above said demand and supply to disrupt the existing industry structures. In brief, the new age is differentiated by the speed of technological breakthroughs, the pervasiveness of its scope, and the tremendous impact of new systems. So, leveraging innovations to grow and compete is inevitable today for any industry, irrespective of their nature of operations. The financial industry has always been an early adopter of new technology. The first ATM was installed in 1967 at a branch of Barclays Bank in London to allow clients to get cash outside the normal working hours. Since then, many automated services such as second generation ATMs, point of sale systems, debit and credit cards, online trading, and online banking services have been offered. Thus, financial services industry leverages fintech innovations to serve, grow, and sustain in this dynamic environment. Today, no doubt, the financial services, including banking services, are driven by technological and digital innovations. Now, large number of financial entities and technology firms are experimenting with related technological and financial solutions as well as new products in the financial services field. In short, technological innovation is considered to be the most influential developments affecting the global financial sector. Innovations related to payments, lending, investments, asset management, and insurance are posing challenges to the existing business models and strategies of financial institutions. On the other hand, these are also bringing opportunities for both the existing market participants and newcomers. At the same time, innovations can create new risks for financial institutions, consumers of financial services, and the financial system as a whole. The frequently quoted statement made by Microsoft founder Bill Gates in 1994, which became the mantra for the new era fintech innovations, that the banking is necessary, banks are not, was a sharp indicator of the emerging business models and the disruptions expected in the financial markets. It is in this backdrop we will be discussing the important fintech innovations and the financial market disruptions. Before going into the different fintech innovations one by one, let us see what does fintech mean. The Financial Stability Board, which is an international body that monitors and makes recommendations about the global financial system, defines fintech as technology enabled financial innovation that could result in new business models, applications, processes, or products with an associated material effect on financial markets and institutions and provision of financial services. In short, it is a new applications, processes, products, or business models in the financial services industry through the internet platform. And what does financial technology companies or fintech companies consist of? They consist of both startups and the partnership of established financial institutions and technology companies trying to replace or enhance the usage of financial services provided by the existing financial sector companies. In a nutshell, what fintech innovations are aiming? No doubt, the fintech innovations are primarily aimed at automating the banking, insurance, trading and investment, and risk management. What are the fintech companies doing? The fintech startups are bringing innovative financial products, services, and processes to enhance customer experience and beat the traditional financial services and institutions. Here lies the disruptive element. When mainstream financial institutions are focusing on extending financial services with their available technology, the fintechs are innovating to extend better or differentiated services with more customer experience, lesser cost, and more speed. The customer experiences provided by fintechs are amazing. The use of these digital experiences offered by companies such as Google, Amazon, Facebook, and Apple have fundamentally changed customers' choices and preferences. They expect the same level of service from their traditional financial service providers. This is the kind of disruptiveness the fintechs are primarily bringing. It is here the fintech is riding the waves of disruption with solutions that can better address customers' needs by offering enhanced accessibility, convenience, and tailored products. This is the context where the pursuit of customer centricity has become a main priority for future innovations. How do mainstream financial institutions survive? What do we see in the financial services industry is that the mainstream financial institutions providing financial services are rapidly embracing the disruptive nature of fintech. They are building partnership with fintechs to sharpen their operational efficiency and respond to customer demands for more innovative services. This new partnering approach offers alternative strategies for both new entrants and startups. However, it also carries a new set of risks. Fintech is gaining significant momentum and causing disruption to traditional value chain of financial institutions in many countries and many markets. Cutting edge fintech companies and new market activities are redrawing the competitive landscape. The crux of innovation is doing far better than the existing solutions, and that's what the market is currently witnessing. The Global Fintech Report 2017 of the PricewaterhouseCoopers gives some confirming results regarding the fintech disruptions. It is found that many traditional financial institutions fear losing their business to innovators, starting with payments, fund transfer, and even personal finance sectors. I am inviting your attention to the PricewaterhouseCoopers Global Fintech Report 2017 regarding the growing influence of fintech in the financial services industry and the emerging business models. This report assessed the continued rise of new business models and the emerging technologies in the financial services sector. The assessment was based on a global survey of 1,308 financial services and fintech executives. The survey results are indicators of the disruptive nature of fintech innovations. The survey also highlights how innovation is coming from outside the financial services sector and being driven by a variety of sources, including tech companies, e-tailers, and social media platforms. In the financial services industry, the startups are going to be the main disruptors, but many of them have shifted to business models and providing platforms for traditional financial institutions. This was the kind of partnership we were discussing above. This is an example of emerging business model in the financial services industry. Next to startups, the social media and internet platforms are coming up as disruptors by leveraging their large client reach to provide channels for customer service and business models. The very recent example is the introduction of a new cryptocurrency named Libra by the social networking platform Facebook. Then, the ICT and large tech companies are also seen as potentially large disruptors to the financial services sector as they are able to innovate at a faster pace than the traditional financial institutions. E-tailers are likely to be disruptive by using their large data sets to provide consumer-focused products and services. Moreover, the financial infrastructure companies are also started providing funds to fintech infrastructure companies. So they may also be considered as enablers of innovation. Thus, the many-sided disruption sources are posing significant threats to the traditional financial services industry. Here you can see the fintech ecosystem drawn from the previous discussions. It comprises of primarily the fintech startups doing significant innovations, the social media and internet platforms like Google and Facebook with their large client base doing innovation, the large ICT and technology companies doing fintech innovations by their own or for traditional financial institutions, and then the e-tailers like Amazon, Flipkart, Paytm, and so on with fintech innovations, leveraging their large customer database and new technology. The traditional financial institutions are also on this ride in a partnership mode with technology companies. What about the magnitude of disruption? Starting with payments, fund transfer, and personal finance, the traditional financial institutions fear disruptive threats on multiple services. The vast majority of the participants in the PricewaterhouseCoopers survey opined that a part of their business is at risk to standalone fintech companies as the fintech has grown to an estimated 24% revenue of the sector. Friends, you please look into the extract from the PwC report. This fear is global, common and deep in almost all continents, and it is also on the rise. No doubt, more and more consumers are adopting non-traditional financial services providers. So what about the strategy of traditional financial services industry? What we experience now is that they are becoming self-disruptors. They are disrupting their own existing services and processes by partnering with fintech startups and financial technology companies. Partnering with innovators will allow traditional financial services companies to outsource part of their R&D and bring solutions to the market quickly. The fintech companies also benefit from these partnerships. They are responding to innovations with multiple strategies to empower their customers on a daily basis. Customer retention is also a new challenge in the context of new fintech competition. So the traditional financial institutions have to focus first on developing efficient product design, ease of use, and 24 into 7 accessibility. That is the suggestive survival strategy for traditional financial institutions. What about the future of fintech? No doubt, when the traditional financial institutions become self-disruptors, they, along with the existing fintech startups and new entrants, would transform the financial sector in a big way. This move is quite evident now. The banking industry has already turned into blockchain technology in a big way as the world is changing and redefining the nature of currency. Today, using of best-in-class design principles and providing great user experiences are no longer sufficient. Modern customers need more reasons to switch to new market offers. This has brought in a competition among the fintech companies. Hence, the fintech providers have to hunt for new and robust solutions which will help them to stand out and offer more viable business models. The present scenario is that some of the fintech companies are addressing blockchain technology, artificial intelligence, or leverage cryptocurrency to build new generation decentralized lending and borrowing platforms, while some others are actively innovate more on mobile banking, payment services, and robo advisors to meet the demands of the so called millennials. In a nutshell, the technologies of fourth industrial revolution and the growing influence of fintech business models may bring more and more changes in the financial services industry in the coming future. It will significantly disrupt the traditional form of financial services. Hope all of you have understood the kind of innovations and the disruptions happening in the field of financial services industry. You can see here some of the fintech innovations. In this module, we will also be discussing one of the most popular and widely applied fintech innovations, the mobile based payment services. It has all the way transformed the traditional banking payment system. The rising need of quick and efficient money transfer methods are ending up in further innovative ways to send and receive payments. Mobile payments offer an easier and more secure way to pay for goods and services online. Vendors as well as consumers need a convenient way for making payments which is less complicated and less time consuming. Since most businesses have gone online with their products and services, and these are available for purchase on many online platforms, more and more people are finding it essential to have payment methods that would suit them. As the world have become more integrated and global markets are now open for anyone, finding a means of money transfer that would allow consumers purchase goods from anywhere without being physically at store is very essential. Mobile payments and web-based payments have really contributed to the growth of e-commerce. BIM app, Apple Pay, Samsung Pay, Android Pay, Paytm, and PayPal are some of such payment apps. The main features of mobile payment services are 24 into 7 transaction monitoring, fraud protection, secure encryption technology, and cost effectiveness. The consumers can pay for goods and services at any time and from anywhere, and the vendors can also receive the payments in near time and also with reduced congestions at the business or service places. Efficient fraud protection through dynamic measures is essentially one of the features of mobile payment services. No one can steal your credit card or debit card details by stealing your mobile devices because the details are stored in the cloud and not in the device. The vendors don't have to incur the costs associated with other modes of payments like credit cards and debit cards. Interestingly, the German online portal for statistics, namely Statista, in one of its reports states that out of the internet users worldwide who used a mobile payment services during the last quarter of 2018 are 47% in Asia Pacific, 38% in Latin America, 31% in Europe, 29% each in North America and Middle East and Africa. The lower usage rate of this innovation, even in Latin America and Europe, are rising the challenges in this regard. Thus, the spread of mobile devices like smartphones and tablets has led to the strong growth of the business model, that is mobile commerce or m-commerce. Apart from physical goods, other strong drivers of mobile consumer spending are digital content such as mobile apps, mobile games, or event tickets. Coming to the revenue part, the global mobile payment revenue in 2015 was 450 billion US dollars and is expected to surpass 1 trillion US dollars by the end of 2019. This is all about the contents included in this module. Thank you for watching the module on fintech innovations and financial market disruptions. Have a nice day ahead.